All right, so I'm taking a look at Robinhood. They just IPO'd on Monday. I'm talking on Instagram, and I'm like, this company, at the end of the day, they're getting all these bad headlines. Oh, the worst IPO ever. I look at the numbers. These dudes are making approximately $200 million a year, but they're losing like $217 a year, which is fine. Maybe that's an accounting thing. Maybe it's like a tax thing, whatever. They've got $2 billion in their balance sheet. They've got $1.9 billion in operating capital. So basically it's like they loaned $2 billion. They put it on their balance sheet. They spent down on some of it. They've got like a $200 million maybe netting business. They're selling for $30 billion. Like when someone's buying a share in Robinhood, it's 30, but it's not $30 billion because 48 hours later, today, they close a business. They're valued at $60 billion. The equivalent of this would be like if I were to sell you a vending machine and I'm like, hey, so it makes $200 a year and I'm going to sell it to you for $60,000. Like, really? Like, it's going to take 120 years to make your investment back. Like, what do you think is going on here? So the sad part about this is like this is in like SPACs, this is in mutual funds, index funds, your teachers unions, your fire and police, your mom and dad's IRA, etc., etc. This is why I say it's inflation, because this is clearly an inflationary time. People are like, oh, look at this. I bought Robinhood this week and now it's up 100%. You know, oh, this is awesome. Their customer base can't stand them, obviously, but they've done some seriously illegal, fraudulent things in the last few months, blocking trading on GameStop, AMC, Dogecoin. They'll allow selling, but they won't allow buying. They're selling lead order flow, so basically, like when leads come in, they're like selling that data to like big hedge funds to like basically play the play ahead of time. So it's kind of like data comes in, and they're like a data center. Nonetheless, nobody's going to jail. The company is now worth $60 billion, and there's really no end in sight. Why I think that it's inflation for now, because obviously it is, until it's not, and then you go into this deflationary period, is because that Robinhood value is literally going to evaporate overnight. I mean, if the company's making $200 million a year, and I mean, I know it's losing that, but let's just say it's making that, and it would take 120 years back to get your investment. And they have no growth. I know that the conversation is like, they're going to grow exponentially. Like, no, they're not. Nobody likes Robinhood. Their reputation's terrible. They're not growing exponentially. But nonetheless, what is the result of stock market crash? Their revenue goes from $200 million, or the vending machine example, just to keep the numbers the same, removing zeros, $200 down to $20? So down to $20 million? I mean, like, what's going to happen after, like, a 1929 event happens? Because, obviously, like, it's going to take 120 years to pay this thing back, right? And that's not, like, the only outlier. Like, there's plenty of companies out there that are, like, way overvalued. Like, Tesla at the moment has a PE ratio of, like, 1 to 1,100. Like, a normal PE ratio in the book, Benjamin Graham's book, I got laying around here somewhere, The Intelligent Investor, he's speaking about, like, a 1 to 20, a 1 to 25 as, like, on a blue chip stock, like a sell. He's like, I wouldn't want to sell my blue chips, but like at 1 to 25, I gotta sell. Tesla's at 1,100. Like, I know it's not a blue chip stock. I know it's more of a speculation, but Tesla is literally, I mean, it's just the market, the equities market is just littered with this. And this is in people's index funds. This is in people's mutual funds. This is in people's retirement. This is in teachers unions. Like, this is everywhere. And they continue to pump the market up, pump it up, pump it up, pump it up, because heaven forbid the market dumps and the baby boomers are officially screwed. So what we're doing is we're kicking the can so that when they are officially screwed, because eventually they're going to be super screwed, they won't be like in '08 in their 50s or 40s. No, they'll be in their 70s, like now. Like, they're like, the youngest baby boomer, I believe, is 60, 59. I think the average is 66, 65, right in there. I mean, the time to allow a stock market dump to occur is like now. Like, really, it was like in '08, but then you had an opportunity in 2020 to be like, hey, you know what? Like, you can just blame things here. Like, you can just, black swans. But now it's like, now things are at all-time highs. Everybody's pouring in, and these folks are going to be close to 70 years old, and the market's going to go to zero. And if you look at what happened from the 60s to 81, it was flat. I mean, you're talking like 14 years of like nothingness. Like, it actually, if you adjust it for inflation, it actually went down 80%. The market actually dropped 80%. If you go to 1929 and you're like, okay, when do we hit those highs again? You're in the 50s. It's from 1929 all the way to the 50s. See, we live in a generation now where it's like, if there's a dip, buy the dip, man, buy the dip. Warren Buffett says buy the dip. The Fed's got your back. Until they don't. Until the whole entire thing just implodes. And when it implodes, baby boomers go from thinking maybe, oh man, I have $1 million in retirement, which isn't enough. The companies are not paying dividends, so I'm only growing on capital gains. So they go from thinking I have $1 million in retirement to understanding you have $200,000 in retirement real quick. They go from thinking they have a $400,000 home to realizing you get a $180,000 home real quick. And so what they have to do is they have to pull their spending way back. So these people are going to be in their 70s, 80s. They're going to way pull back their spending, what they're expending on, and it's not going to work. Like, we're going to have like a bunch of homeless boomers walking around North America in the could be next week. Well, it'll probably take a few months for it to really shake down. So we could have a bunch of homeless boomers at any point between now and definitely the next 2, 3, 4, 5 years. And then, they may have some capital to work off of, but it's not going to last them more than like 5 years, 10 years. They're screwed. This is why I see like Raoul Pal on Real Vision saying, like, the silver lining here is like the crypto space, like the idea that we can move into crypto assets. Like this video is posted here on YouTube, but it's also posted on Odysee, and I own Odysee credits, and it's a completely different currency. And so we're migrating over and out of the traditional, legacy financial system, the fiat dollar, the US dollar. But we're gonna potentially have this nice segue over. The boomers aren't doing that. Like, you tell the boomers, like, hey, you know what you guys should do? With 10% of your portfolio, you should buy Bitcoin. Like, seriously, you should. Is it overvalued at the moment? Yeah, it's pumped a lot. You should probably wait for a pullback. And you should start dollar cost averaging into like a 10% position in Bitcoin. Why? Because why would you own 0% interest bonds? Like, why would you own bonds that have nothing but currency risk and pay 0% interest? And then, the interest rate, the state is 5%. It's really like 10 or 15 or 20%. So it's guaranteed losses every single year. Why wouldn't you just move it into Bitcoin or gold? And both of those options for boomers are super, not what you want to do, because your retirement guy can't make money selling you on that. Like, he could sell you into some gold stocks. That's a leverage play into those, the gold price rips, and then the company owns X amount in the ground. You can look at their balance sheet. Their balance sheet's going to grow exponentially, but also when they harvest or pull gold out of the ground, they're decreasing their balance sheet. So it's a crappy little business. It's not something you want to be in forever, but for the moment in time, it's not a bad option. But nonetheless, these dudes are going to get screwed, and their financial advisors are going to be sitting there telling them the whole time, oh yeah, just dollar cost average in, buy the dip, pay our fees. And then it's just going to poof. Robinhood's going to go to zero. It's going to go to freaking zero. $60 billion value. Probably by then it'll be $100 billion of value. Will just disappear overnight. And then also, will their revenue really be, or revenue or profit, however you want to look at that? I'll link to the Yahoo, their numbers here in Yahoo Finance. Will the numbers really be 200 million a year anymore, or will they be more like 20 million a year? How many people are going to be trading stocks in 1930, 1931, 1932, 1933? They're going to be trying to eat. And that's literally where we're at. That's a legit, actually, probably, definitely happening thing. The only way that this doesn't happen is they hyperinflate out, and then it becomes worthless anyway, especially when you make it relative to the metals, silver, gold, whatever you want to bank to. So I know it's an untraditional video for what I typically put out here, in probably more detail than most of you guys are thinking about, but what I want you to think about is the deflationary part of this crash. The idea that it's inflation now because you bought Robinhood at $35 a share, which is $30 billion, which is a completely bogus number. Now it's $70 a share the day of this video posts. So now you doubled your money. So you're like, oh, okay, cool. So inflation, right? Now you have more goods and you have more currency units to go chase more goods and services. So now you're like, well, I have more money now, so I'm willing to pay a little bit more for a truck, or for whatever, truck went up 10 or 20%, whatever, my Robinhood went up 100%. So you're in inflationary period, plus people aren't producing goods and services. They're at home getting stimmy checks and unemployment. And so, you have less things being produced, you have more currency units in circulation, that's inflation, and then immediately after that, you get some sort of epic crash. That's hardcore deflation. And then what are they going to do? They're going to turn the printer on like you have never seen it. You think $10 trillion in the last 12 months was anything? Add zeros. We're going to figure out what comes after $1 trillion. We're going there. The whole world's going there. But when they screw this up and the US dollar hyperinflates and becomes absolutely worthless, it wrecks the entire global economy and brings on the Great Reset, which is World Economic Forum, evil stuff. So prepare now, get yourself out of the system, stack physical metals, maybe cryptos. I think it's got to be private cryptos. I don't see how public cryptos are going to work. There's going to be a problem here. Like the sovereign states here, the legacy brands are not going to be too happy about crypto transactions. Okay, so we go to war to protect our currency. The US dollar has a lot of blood on it. Don't think it's going to stop just because Bitcoin sounds cute. I think it's got to be private, so I'm pretty bullish on private cryptos like Monero, Dash, Zcash-ish, Pirate Chain. Like, I think that's where to be right now in 2021. But nonetheless, if you're going to get a zero interest, bond, you might as well just buy gold. It doesn't produce any yield, but at least you have price appreciation. You don't have any currency risk. If they screw up the currency, your bond can go to zero, but your gold is worth like an ounce of gold, which purchasing power relative to whatever else anyone can purchase might make you a pretty wealthy individual. So anyway, that's my 2 cents. Hope you guys enjoyed it. Peace.